Welcome to our GTI chart of the day for February 15, 2017. Today we will be looking at an interesting chart after the commentaries made by one of the most powerful women, Janet Yellen, yesterday to the Congress. This speech made to the Congress highlighted the fact of new rates hike could occur in the upcoming months if data and economic data continue to the positive trend, and stated that it would be imprudent to wait too long to make these hikes. After the commentaries were made at 10 a.m. started the speech, we could see here first how stocks from the S&P 500 futures index started the new trend. Today we will be looking at this new indicator that is the GTI trend moving average. This indicator that goes into the package of the 11 indicators that you could find in the application of Bloomberg helps you to give through a moving average the different trend signals for the market. As you can see, after the commentaries were started here at 10 a.m., we had a bearish trend. But afterwards, immediately at 11 a.m., when she started to make the commentaries about the interest rate hikes, we saw how stocks reacted positively going upwards. On the contrary, we had here bonds and how the 10-year bonds from the Treasury started and came from this bullish trend that we had in the previous sessions, but started to weakening by at midday or noon, and they started to give this bearish trend on yield terms. We also wanted to show you how the US dollar reacted. Not only bonds were the ones that had this positive performance in last session, but as you can see here in the blue bars, we had also the positive performance from the US dollar. Here, similar to what happened in stocks, we had this positive and bullish signal that continue. And by the end of the session, more or less in the noon, we had this bearish new trend that for now is moving ahead to a new bullish trend. So as you can see here through this moving average that is adjusted for especially these movements of volatility stress, we could see how the signals were really good, how stocks and dollar reacted positively, but on the other side, bonds reacted negatively to the commentaries of Janet Yellen. Today we will have the second part of the speech made to the Congress, and important event we will be having also employment data. She will be talking about manufacturing, industrial production, and minor sales, three of the topics that the market is expecting for today. As always, remember to enter to the Bloomberg app application and search for global trading indicators. Thank you.